Welcome to AFSPA Talks, a production of the American Foreign Service Protective Association. Each month, we deliver informative health and wellness topics you want to know about, so make sure to subscribe to us on your preferred podcast platform. And if you have any questions about content discussed in this episode, ask them at AFSPA Live, our live Q&A session streaming every last Thursday of the month at 11 a.m. Eastern Time on youtube.com/AFSPA Cares. Now here's your host, Chief Executive Officer Kyle Longton.
Hi, and welcome to another episode of AFSPA Talks. I'm Kyle Longton, and with me as always is...
Maddie Norton.
Maddie, it is February.
It is.
And we have
we have a great theme.
We do.
We're big into alliteration at AFSPA, and so our theme for February is Financial Wellness February.
That's great. And we're looking at this from a number of different angles, and we really want to highlight a lot of the partnerships and resources we have to available for AFSPA members. That is not something that we ourselves within AFSPA do. We're here for a lot of things, but for those things that we can't do ourselves, we've got partners, and we're trying to highlight that this month through podcasts, including today's episode, and some other things that are coming up, including some webinars this month, right, Maddie?
Yes, we do. We have this episode will be coming out on the 17th of February. And so you will have exactly a week to still sign up for our financial wellness checkups through Prudential. You can do a 15-minute slot to meet with a financial professional and discuss your goals, your objectives, kind of where you stand. And so definitely sign up for that if you are interested. It's going to be on Tuesday, February 24th from 10 a.m. to 4 p.m. Eastern Standard Time. And those pop up throughout the month. So definitely keep an eye on our events page to make sure that if you want to attend those, that's where you can sign up. And then, of course, for AFSPA Live this month, we will be focusing on financial wellness and the thrift savings plan. And our guest today will also be there. So listen later on to hear about what we'll be talking about. And so that will be on February 26th, a Thursday at 11 a.m. Eastern Time. And if you can't make that, don't worry. You can watch it on our YouTube channel at AFSPA Cares, and you can watch all of our live shows there. And we will include the form where you can submit questions early in the show notes and where you can watch as well. So that is coming up. And then really important, this isn't February, but March 6th is our annual AFSPA member meeting. I know, fanfare. Everyone's clapping.
Excellent. Yes. And we are very excited about that. And we'll include a link in the show notes to the registration page for the annual meeting. If you can't join us in person, we know a lot of people can't. We will have it live around the world, and we will ideally, we had some technical challenges in the past, but we will be doing our best to have a recording of that as well, including our keynote with one of our partners from Hinge Health to talk about not only their programs, but also provide an example of how AI is enhancing healthcare, but not replacing the human connection. So we're really looking forward to that. And actually, March guess we got the annual meeting, but our theme for March, just as a preview, will be once again Medicare March. We're continuing our alliteration, right?
Yeah. Mm-hmm.
And so we do this every year because the federal population is unique in terms of their needs for health insurance and Medicare and how the two work together. But there's other ways in which federal employees and annuitants are unique in many ways, I should say. One of those is just in terms of financial planning and financial wellness. The retirement programs and even life insurance and long-term care insurance and other pieces that are outside of AFSPA's realm, but that touch your lives and your employments are very different from those in the private sector. And so that's what we're looking at today, is a little preview of what you'll find out on February 26th with AFSPA Live, but also some of the expertise that one of our partners offers. And so we are glad to welcome Greg Klingler, who is the president and CEO of GEBA, as well as GEBA Wealth Management. Before we get into his full introduction, I do want to just highlight all of his credentials, just to show the real deal and a unique unique perspective and unique expertise when it comes to federal employees. So he does have a master's of science degree. He's also a certified financial planner, a CFP. He has another credential which is not as familiar, which is the ChFEBC, which is a Chartered Federal Employee Benefits Consultant. And he is also a certified plan fiduciary advisor. So he's going to tell us a little bit about exactly what that means in his approach, as well as GEBA's overall approach to serving federal employees. But Maddie, why don't you give us a little bit more on his background and his approach?
Absolutely. So, Greg joined GEBA in 2010, and he has more than 2 decades of experience in assisting state and federal employees with their insurance benefits and financial and retirement planning. And Greg has provided financial education to thousands of federal employees through seminars, webinars, and other media like our podcast.
And he'll do the best job of demonstrating exactly what he and his colleagues at GEBA offer. So without further ado, we'll get to the interview. And Greg, welcome back to AFSPA Talks. Thanks for joining us.
I appreciate you inviting me.
We're glad to have you here. GEBA has been around for almost 70 years, but we may have some listeners who are not familiar with it. So can you tell us a little bit about the history and what GEBA does now?
Absolutely. GEBA's roots actually tend to coincide with that of AFSPA's. AFSPA and Foreign Service, they were kind of interconnected back in the, the 40s or 50s, right?
Yep.
GEBA was created back in 1957 by NSA employees for NSA employees under the same guise, the Voluntary Employee Benefit Association. Back in 1957, we were created with a very specific purpose in mind, and that was health insurance and life insurance. Over the years, OPM stepped in, ended up offering FEHB plans. The OPM also started offering FEGLI plans, and our members' needs ultimately started to change. And GEBA continued to evolve with the needs of our membership. In 1982, when there was discussion about how the old pension, so for those foreign service folks, the FSRDS, or the civilian folks, the CSRS, that old pension started transitioning to the new pensions. That's when we started dipping our feet into wealth management with a very simple retirement supplement benefit back in 1982. Since then, we've slowly, incrementally grown and added additional benefits and services. And in 2017, we rolled out full service financial planning. So everything that you can get from any planner on the market with all the products and all the software associated with that, but with the important change, I guess, of being in a nonprofit organization that is run with salaried financial advisors, that is governed by federal employees, with a mission that was and has always been, from a financial insurance perspective, make the federal employees' life a little bit better today than it was yesterday. And that's ultimately the goal. And we've had a lot of success over the last couple of months doing that. And quite a few years as well.
I love anytime that we have a chance to get together, Greg, whether on camera or off, because we're just so aligned in our approach to things as organizations, but also personally in our approach to that. And so I love the wealth management side of things, and you touched on this a little bit, but I think there's a little bit more that we can dig into for our listeners about some of the unique qualifications that not just sort of how compensation is set up, but some of the qualifications that you and some of your colleagues have. And I wonder if you could talk a little bit more about those qualifications and even some of the specific services you all offer in the wealth management and financial planning areas.
Yeah, absolutely. So, the board gave me a lot of leeway in 2017 when I came over, and allowed me to build a financial services program that I thought was the best I could do for federal employees. And with that guidance, we did a number of things. But if you were to ask me to describe what we do from a wealth management perspective as simply as possible, I use 3 words: experience, expertise, and motivation. So experience, all of our financial advisors have at least 10 years of experience. Expertise, all of our financial advisors have proven through certifications a level of expertise in federal benefits, and not only federal benefits from an academic standpoint, but how to supplement and augment those federal benefits as part of a true quality financial plan to ensure that people are set for the future with whatever goals they may have. And then the last piece is motivation. One of the things that I think is a major conflict of interest in the marketplace today is if you pay a higher fee, a financial advisor generally makes more money. That's kind of how it works, right? Zero-sum game. Um, we instituted, with the help of the board, salaries and salaries alone. The goal is to make sure nothing stands in the way between our financial advisors and the best service and best expertise and best recommendations that our members receive. And we've done a great deal of work and we've had a lot of success doing that.
All right. And you kind of touched a little bit already that GEBA is unique because of how you guys work with the federal employees. But what else is unique about the services offered?
So I mentioned nonprofit, and being a financial advising firm and being a nonprofit allows us to operate in different ways than most normal firms can do. So another, for instance, is we don't believe in giving recommendations until we know everything about the person. Because how do you give good recommendations unless you know everything about the person, right? So what we offer is a free and no obligation financial plan for people who walk into our door. Once we understand everything about the person, their goals, their desires, their assets, then we truly believe that we can give good quality recommendations going forward. In many cases, we're going to touch on things they may not have had questions about because we do this for a living. We do this with federal employees every single day. And we're going to touch on allocation. We're going to touch on investments. We're going to touch on contributions. We're going to touch on risk mitigation. Do you need insurance? Or are your assets large enough where you don't need insurance? These are all very important questions to ask yourself as we move forward. And through the software and through our expertise, generally we can make little tweaks that allow people to either retire earlier or spend more money in retirement or have a better safety amount as they transition mathematically into retirement and their budget. So there's a lot of different ways we can handle it, but the key is we start off by doing a free financial plan with no obligation to ensure we're giving the best recommendations possible.
I think that sort of is a good bridge to our next question, which is sort of, some people are hesitant to consider any kind of advisory service when it comes to their finances. They maybe think, look, I've got as you mentioned before, they've got their FEGLI coverage, they've got maybe a respectable amount going to their thrift savings plan account. So, and they think, I don't have enough money that I need to talk to somebody. I'm fine. Everything's on track for retirement at 65, 62, whatever. But I guess what factors would you encourage someone to consider if they're on the fence about reaching out to GEBA for your services?
Yeah, I've heard the exact same thing, Kyle. There are people who, for whatever reason, are resistant to talking to financial planners. Sometimes those people are called wealth managers and they don't feel like they're wealthy. Sometimes they've heard stories about expenses. Sometimes they've heard about the conflict of interest that I explained earlier, where financial advisors tend to make more money if the fees are higher. With GEBA, we've kind of sidestepped a lot of those initial conversations because our employees are salaried. We do offer free financial services before we even get started. So we can answer 9 questions out of 10 that a person may have without $1 hitting the table, without any contract being signed, just because we're here to help federal employees. Now, I do agree with you that federal employees, they've done some planning with maybe out putting pen to paper from a planning perspective. They became a federal employee. What does that mean? Well, they have subsidized health insurance. They have a pension. They have the Social Security supplement. They have the TSP, and they're probably contributing to the TSP in some sort of allocation and with some sort of contribution amount. That's all planning. Now, the question is, once we take all these pieces that they put together, what does that mean? Does it mean they can spend $10,000 a month and retire comfortably with a high probability of success? Does it mean that they don't need FEGLI because their assets have now exceeded the amount they need for FEGLI to cover? Does it mean that they know which account to pull from first? Their brokerage account, their traditional TSP, their Roth TSP? Should they sell that house to fund their retirement earlier or later? These are all very important questions to ask, and this is where the DYIer tends to have trouble completing the process. So that's one of the things we work on when we work with our employees. They have all these great pieces, they have all these great parts. They've had a lot of success, generally speaking, in investment, especially over the last 10 years. Now it's about putting it together into one cohesive plan that makes sense. And did I mention it's free and no obligation?
That's incredible because I know, especially since I'm relatively new to the workforce in a way. So like learning about different ways to separate your money into savings account, and I'm not a federal employee, but it's complicated and it's even more complicated for federal employees. So it's incredible that there's people like you guys that are able to kind of not dumb it down, but make it easier and easier to understand and become a simpler process. And with that being said, I think it might be beneficial for some of our listeners to have an example of exactly what they might get from a GEBA consultation. I know we need to stay on the right side of regulations, so we'll keep it general. And then can you talk about the different TSP options and why someone might want to consider each?
Okay. So, generally, the way we start by working with people is it's an initial consultation, and where we talk about, okay, what are your goals? Why are we talking in the first place? Are we talking about retirement? Are you interested in looking at how much money you should spend? Are you looking at buying a second house? And we really get down to the nuts and bolts of, okay, what are the goals?
Right.
From that point, they're going to give us information, and the better the information going in, the better the information going out. So we typically ask for statements, and they deliver them to in whatever secure capacity they can. At that point, we put the information into our financial planning software, and we schedule an appointment. In that appointment, we go over the full financial plan where we touch on allocation, we touch on budget and retirement, we touch on the probability of success, we touch on insurance, whether you need it or not. We touch on long-term care, which, whether you need it or not. Self-insuring is a wonderful thing if you can afford it because it's free. Um, and then if it makes sense and if there are recommendations to give, I have sat in meetings where somebody nailed it. They did everything perfect. There was nothing to change. The truth of the matter is, though, most of the time there's something that we can tweak to make their lives easier, to increase the probability of success, to increase the amount of money they can spend in retirement, to elongate the period that they can retire, or frankly, be able to retire early by making little tweaks, primarily in underlying allocations. Are they too risky, or are they not risky enough? Our financial planning software runs a quantitative analysis using Monte Carlo simulations to kind of give you a probability of success. If there are recommendations to give, we ultimately provide those recommendations. It's up to the client whether to accept those or not. If they choose to accept, we move forward with processing those recommendations, whatever those recommendations are. Is it long-term care insurance? Is it reducing long-term care insurance? Is it managing your money? Is it leaving a portion of your money in TSP and then moving a portion of your money out? It all depends on the person. And then there is one rule that we have every time somebody signs up to work with GEBA. It is a symbiotic relationship. We're going to do our best to help our members in the best way possible, but we do require your time. You're going to meet with us every single year, and we're going to talk about your investments. If something comes up in the market that kind of shocks what we expect, and we need to meet with you earlier, we expect you to pick up the phone. And then every year that we meet, or more often, we reevaluate your financial plan and we review your investments to make sure we're on the right track. So in a brief nutshell, that's kind of how our process works. And Maddie, I know you had a secondary question about the TSP.
Yes.
All right. So you mentioned regulations. So thank you for doing that. On that line, I should probably start off by saying that past performance that is not indicative of future returns. Warren Buffett actually had a quote that said, very simply put, trees don't grow to the moon. And the idea behind that is, just because it's the top performing sector this year does not mean it's going to be the top performing sector last year. In fact, statistically speaking, it means it won't be. So having a firm understanding and a firm understanding of diversified portfolio, having different types of assets in your portfolio is really key. And the TSP is no exception. Just as for instance, over the last 10 years, the C fund has been the winner. Most federal employees know that. They've seen the huge returns coming through on their TSP statements. That is large cap domestic, or that is particularly driven by what people call the Magnificent Seven. Tesla, Meta, Google, NVIDIA, the big names. Now, with that being said, in early 2025, the C fund was not the winning performer. It was actually the I fund and the S fund. The I fund primarily driven by the fact that the dollar got weaker, which means money earned in other currencies was more valuable relative to the US dollar. And the S fund, because they realized that valuations, so price to earning ratios, were getting pretty outlandish on the large domestic side and looked a lot better on the small and mid cap side. So again, that's just an example why diversification matters. Anybody who had all their money in the C fund for a long period of time has made a lot of money. And a good gambler knows when to take some of their money off the table and maybe diversify it a little bit. Breaking down the TSP, well, you got the C fund, that's the S&P 500, large domestic. You have the I fund, which is the MSCI ex-US, ex-Hong Kong, ex-China. What does that mean? Big international companies that don't include US, Hong Kong, or China. You have the S fund, which most people think is small cap. It's actually small cap and mid cap, so middle-sized companies as well. And it's actually and I always get this wrong, the Dow Jones US Completion TSM Index, but big or medium-sized companies and small companies. One other point that I want to just quickly mention is the L shares. People get confused on the L shares just a little bit. So these are what are called target date funds. So most people are aware of target date funds, 2030. What is it? It's you choose your retirement date. That's the date that's in the name. And the manager of that fund is going to manage to that date. The idea is it's going to start reducing risk until you hit that date. It doesn't mean at that date you're going to eliminate risk. It means you're going to have an appropriate debt to equity ratio that's going to protect you in retirement. BlackRock is the manager of the TSP funds. But I do want to caution everybody, not all target date funds are the same. If you look at, let's say, Vanguard or Fidelity, they're typically going to be more risky and have less international exposure than the TSPL shares. That's just the nature of them. So it's just important to be aware. I actually had the opportunity to discuss this particular topic with our BlackRock representative on Monday. And I did ask, based on the decisions that are made within the BlackRock TSP management of the TSP portfolio, are those corporate decisions or is it managed in a silo? His comment was, no, the TSP funds are in fact managed in the silo, but with the caveat is that BlackRock tends to agree that international exposure is better now than it has been in a very, very long time. So just keep in mind, L shares, higher international exposure, but according to BlackRock, that's definitely not a bad thing. I think I may have kind of a little long-winded on you, Maddie. I apologize.
No, that was good. That was good.
This is
I'm learning lots
exactly,
of things.
yep. And a great preview for AFSPA Live
Yes.
on February 26th when you'll join us again. I wanted to circle back to something you mentioned before in terms of sort of you talked about a symbiotic relationship, but essentially we're not talking about somebody having to actively manage their portfolio alongside you weekly or even monthly. What I heard you say was at least an annual consultation and touching base when big events happen. Is that right?
Yeah, and to be clear, yeah, we're not asking, we don't ask our members to manage their assets. That's literally what our job is. But we want people to be involved. And we want people, if things were to change, we want to know about them as soon as possible so we can make changes accordingly. And typically meeting annually allows us to do that. You may have planned to retire 5 years from now, but all of a sudden the fork in the road comes through and you retired, on September 30th. Things change and we want to be at the forefront of those changes in your life.
For sure. And lots of information in this podcast. And like Kyle said, we'll see you again on the 26th. But before we go, is there anything else you'd like to mention?
Yeah, just one quick item. So I know in the federal environment right now, there's been more uncertainty than there has been in a long, long time over the last 16 months or so. There was a time where federal employment was considered to be rock solid. Everybody you're taken care of. Today, there's question marks. And what we have found is uncertainty in the market is actually worse for the market than fear and bad news. So with that being said, we've seen uncertainty cause fear within underlying investors or people making decisions. And we've seen very smart people based on fear make very, very bad decisions. And that's kind of what GEBA has been built for over the years, whether we did it on purpose or not. And we're sad that people are going through these issues. But, as we started working with people over the last 16 months, we were able to provide them with the stability and the knowledge to make the best decisions for themselves and their family. And it's something we're very proud of. It's something that we were created back in 1957 to assist with, maybe not with this specific instance, but we've kind of evolved into being able to do that. And we take that responsibility very seriously. So if you have a financial advisor who understands federal employees' benefits, definitely lean on them. If you don't, reach out to us. We're happy to help.
All right. And I think that's a great place to leave it. Greg, thank you. Thanks to you and everybody at GEBA and GEBA Wealth Management for what you do for federal employees. And we'll look forward to talking to you again in a couple weeks.
I appreciate it. Thank you.
Thanks again to Greg Klingler from GEBA and GEBA Wealth Management for joining us today. For more information on AFSPA's partnership with GEBA and the services available to AFSPA members, please visit geba.com/AFSPA or click the link in the show notes. This has been AFSPA Talks, a production of the American Foreign Service Protective Association. All information offered in this podcast is meant to be educational. The views expressed by the hosts and guests are their own and do not necessarily represent AFSPA. Should there be any discrepancy between information offered in this podcast and official plan documents for the Foreign Service Benefit Plan or the other products offered by AFSPA, the policy provisions will prevail. Thanks for listening, and be sure to subscribe to AFSPA Talks to catch our next episode. Please rate and review us on your favorite podcast app and share feedback with us on Facebook, Instagram, or LinkedIn. Search for @AFSPA Cares. We'll talk again soon.
Thanks for listening to this episode of AFSPA Talks. Be sure to subscribe to our channel so you'll never miss an episode. If you have any follow-up questions about the topics in this episode, join our AFSPA Live Q&A session on the last Thursday of every month. We will be streaming live at 11 a.m. Eastern Time on our YouTube channel at youtube.com/AFSPA Cares. Thanks for listening.